morning. It's February 1st, 2023. Already 1 month into the new year. Hope everyone's doing well. And just want to bring you a short video to refresh what things are looking like on a national level as well as local and then today for our current area with real estate. So without any further ado, I'm going to jump right in. I am Ruth Squires with eXp Realty, RES Luxury Group, and we will be continuing to bring you the white glove service and red carpet treatment. We've got some really awesome new things that we're doing in this new year, so stay tuned, keep an eye on us because we plan on making some waves in 2023. So as far as the market's concerned and what's happening with the economy and so on and so forth, I want to first talk about the national perspective. So, we still have a lot of chatter and hype about interest rates. We're very unhappy as consumers about rates being at the levels they are, even though that's really kind of normal and acceptable rates that we have right now. When we look back, though, December 2021, the average rate was 3.1% on a 30-year mortgage, according to Freddie Mac. That's the highest monthly average since June of 2020. Today, we have rates that are close to 6.5%. And December 2022, about the same, rates were near 6.4%. So the average conventional buyer of a $300,000 home, which is close to our median price here in Citrus County, with 20% down at 3.1%, was making a mortgage payment of $1,000 a month. When we compare that same buyer at 6.4%, the payment is $1,500 a month. So that's nearly a 50% increase in payments because of the interest rate. So it does have a significant impact, and of course this erodes purchasing power for those buyers. The price that they're willing to pay is now less, or the price point that they're searching in is lower because they're trying to stay within a budget. So that's where we're having this dynamic of fewer sales because some buyers are stepping aside, stepping out of the market for the moment to see what's happening. And we'll talk more about what those numbers are here in just a bit. But I do want to reiterate the economist projections for where we're at and what's on the horizon. And so economists are saying that they believe that inflation has peaked, and also then correlating with interest rate changes. Interest rates, we hope, have peaked, which then means that if that is correct, we're going to see a gradual decline in rates as we go forward through the year. So where do we end up? And of course, all of these things are projections, so please bear that in mind. Nobody knows for certain. But where do we end up? We're projecting somewhere in the 5 to 6% range. So probably 5.5 would be a good number to be thinking about as you're planning towards the end of the year. So we will be watching daily and weekly and monthly, as you know, to stay on top of what things are actually looking like. Today we have rates that are below 6.5. Yesterday I pulled rates of 6.17% for the 30-year mortgage rate. So we do see that starting to happen gradually with that rate reduction as we go day to day. So stay tuned. If you have any questions on that, we're here to help. We're tracking the numbers daily, so please use us as a resource. So what's happening locally? The local market stats, which have been posted now to the website, they are showing that our inventory levels are actually down a bit, and sales are continuing to slow down. Again, the interest rates, inflation, the economic factors are, I think, the biggest driver of this. And we're having a higher level of expired listings at the same time. So when we look at inventory levels being lower, I think what's happening is the homes are expiring because we don't have the number of buyers out there fighting over homes that we had previously. And so homes are expiring off the market. Sellers are becoming disenfranchised and deciding not to continue with their home on the market. So that, just kind of organically creates lower inventory levels when sellers start stepping out. So buyers are stepping away, sellers are stepping away. And if you're in that position and you're wondering, what should I be doing? We certainly have some advice for both sellers and buyers. I will tell you the advice is the same, but for different reasons. As far as it's concerned for sellers right now, it is a strong market still. If you look at the numbers, if you look at the market saturation, we are still in a seller's market. And so if you need or want to sell, don't disregard the seller's market. We are shifting, and eventually we will not be in such a strong seller's market. So although it's changing, it is still a strong market. My team is ramping up with some new sales strategies in order to stay in line with the shifting market and bring more and more value to you. So if you are selling, please come talk to us, because we'd love to share with you what we're doing and just give you some more ammunition as to how you can navigate this changing market. When a market's shifting, it just means we have to pivot with it, right? So we have to make some changes in what we do and how we do it in order to stay relevant, stay prudent in that market that we're in. So that's something we take very seriously. So that's, I would say that's kind of the main gist of it. The market continues to, homes are still selling. Every day there are closings. It's just being more strategic and aggressive about how you're positioning your property. So don't be afraid of the market. And if you're a buyer and you're concerned about interest rates, remember that interest rates are cyclical, just like real estate has cycles. And so when you talk to a professional mortgage broker or lender, they will tell you there are very distinct cycles. And the belief is that we've hit the peak of the interest rate increases, and so they are coming down now, and that cycle will last for a period of time. So what happens is, even if you get set into a rate that is higher than you want, and guys, we've all been here before, we've seen this happen time and time again. I'm not saying anything that you don't know, but you get a mortgage at a rate higher than what you really want. As rates come down, you can refinance, and there are programs that will allow you to refinance for reduced cost or no cost when you refinance. So something else to talk to us about if you're curious. How do we make sure we get into a program like that? How do we have access to those things? Absolutely something we can help with as well. So we are your trusted team in real estate. Please keep us handy if you have any questions, any needs going forward. I hope this information has been helpful. And again, I'm Ruth Squires with RES Luxury Group of eXp Realty. Please give us a call, 352-794-1426. Or if it's more convenient, you can certainly text me, 352-476-3303. Have a great day.